What is going on, everybody? TG here, back with another video. Not the video I wanted to make, but not as bad as it could have been either. Alibaba released earnings today, and the stock initially dropped really hard. This sucker was down in the 192 exactly, and then it rallied back up to 197.38 to close. They released earnings today, and let's go ahead and break down some of those earnings. First off, they had a nice earnings beat on the earnings per share, coming in at 16.6 versus estimates of 14.42, but they did miss a tad bit on revenue. They were expected to do 209.4 bill. They did 205.7 bill. Also, they missed a little bit on the annual active consumers in China. They came in at 828 million versus the analyst prediction of 830 million. So on the top, it doesn't look like a great earnings quarter overall, but one of the things that really stood out to me was the profitability that they have, and they're starting to become a lot more profitable now, which is obviously great because we'd like to generate profits more than just revenue. Another amazing thing is Alibaba announced that it will be increasing its share buyback program from $10 billion to $15 billion. This is huge. This is actually the biggest in the company history, and it shows a great confidence in that department. Speaking of departments, their cloud and entertainment businesses are key areas for future growth, and revenue from their cloud computing segment rose 29% year over year, and also the digital and media entertainment saw 15% year over year growth as well. So we're obviously seeing some nice growth in Alibaba. The company itself, not the stock price yet, but that's how we go long term on our positions, and I think that we're going to see that overall. Obviously, it's not been performing well stock-wise. Shares have gone down 22% over the past year, while the S&P has gone up 33.2%. But one of the things I am looking forward to is, tomorrow I want to see what this PE ratio is going to be like when it's all corrected. I think it should be around exactly 20 or maybe even under, which will be obviously really great. As you guys can clearly see, I have all my positions still here in Alibaba. We were down about $4,000 in the day for Alibaba, but overall, we're still very confident, very bullish. Did pick up a little bit more Amazon, but that's beside the point. But we like this. We think this is a very good setup here, and I'm very bullish on it still. Obviously today, had they got that revenue beat, the stock would have absolutely flown. But historically, Alibaba has had a tendency on earnings to dip a little bit and then kind of rise back up afterwards. So I think that overall, this is a pretty good earnings quarter. Obviously, I wish you could have got a little bit more revenue. It was such a small miss that they got it by, but also 1337, that is elite. So this is proving to be a good time to get in Alibaba. But I am curious about what you guys think about this. Last video, I heard a lot of you guys are in Alibaba big. Let me know again, what you guys are in, what you guys are planning on doing, and what your thoughts are on this earnings. You can either tell me in the YouTube comments or definitely come in the Discord. It's totally free, and talk to me there. I'd love to talk to some of you guys and see what plays you guys are thinking above. But overall, I still think this is a very good opportunity. We're seeing Alibaba under $200, and I'm holding strong. I got my options there. They're pretty long term. The closest ones really are September of this year at the 210 strike, which is very risky. This is the one I'm a little nervous about. I'm not gonna lie to you guys. I'm a little nervous on it. We're already in August, and it is well under 210. So we have a little reversal. We will make a lot of money off that. But obviously, if it's underneath it, we're going to lose a lot. So, we're already down $4,300 on it. But if, everything turns around, we will make a lot of money on that. So, again, we'll have to see what happens with everything. But, a lot of these positions, 195, we're above that right now. 180, we're above that right now. 175. So, we're above a lot of them right now, which is good. We're holding out strong, especially, if you look at these two right here, $6,400 and $9,200. That's a lot of money in those two, so that's kind of what we want to see. But, guys, it's going to be a bumpy ride. It has been a bumpy ride for a while, but I believe, and I genuinely believe that this is an amazing time, an amazing opportunity to own a long-term growth company at a very, very low multiple. We all remember when COVID hit and everything crashed down, and, you look at stocks like Amazon, they got clobbered, right there in March of 2020. And man, did that turn out to be an amazing buying opportunity. So, and Amazon has stayed pretty stagnant, August of last year to this, it's actually down. So, sometimes it goes through these stagnant periods, but overall, the trajectory is upwards. So again, gonna be a bit of a bumpy ride, not for everyone. Obviously, with the regulatory risk, we saw it happen with Tencent stock yesterday. That thing got hit very hard, was down a lot more at one point, and then kind of roared back about 5% after that. But man, that was rough to see, that stock being down so much in the morning. But I do think that the worst is over, and we're gonna have a chance to really come back strong from this. So, guys, have a wonderful day. Hope you guys are doing good, and I'll see you guys in the next video. Thanks. Bye.